Welcome back, everybody, to the Informed Home Buyer Podcast. I'm your host, as always, Rich Curtis. I've got my co-host with me, Dave Miller. Good afternoon, Dave. How you doing?
I'm doing well, Rich. Thanks for having me.
All right, so today we're going to be talking about price drop versus rate drop. How does the math work out? Which one is better for you? Which one can we expect this year? And how much of each equals what kind of savings for you? So, in general, people have been very, very rate focused since our interest rates essentially doubled in July of 2022, and interest rates were driving the market for the last few years. But now we're facing down an environment, and we'll get to this, where we don't think rates are going to move a whole lot. And it's actually fear, uncertainty, and doubt driving the market. And we're staring down the possibility of price reductions. So, how much price reduction do you have to get before that equals the same you would have gotten by the interest rate reduction you're waiting for? And what are some of the additional benefits that come with getting that cash savings via a price reduction rather than an interest rate drop? We're going to go through all that for you today so you can evaluate as prices start to come down. When's the point at which you want to jump into the market? When's the point at which you are now getting the same discount that you were waiting for all along in the interest rates, and it's time for you to hop in and purchase a home? You should know by the end of this episode, so stick with us. I'm going to put it right over to Dave to open the conversation up with, what does it look like on our, we usually work with around a $500,000 purchase price. What does it look like when we get a half a point reduction or a 1 point reduction in terms of monthly savings? What does it look like when we get purchase price reductions? Do some math for us, Dave.
Okay, Rich, and I think as you stated, we typically use a 25 or a $500,000 purchase price. And loan's going to be a percentage of that down based on loan to value. And the other point that you brought up, interest rate. What's the interest rate? What's my purchase price? That's going to really determine your payment, as we're seeing cracks in values and home prices starting to come down, but we don't see interest rates coming down. There's talk that the Federal Reserve is going to lower interest rates. But for those folks that have been sitting there and saying, hey, I'm going to maybe wait till interest rates come back down, maybe they're going to get 6 or below 6, we just don't anticipate that happening. So really focusing in on, the next best thing, it's a price reduction.
But before we get into that, what are we expecting? Like with the Fed's upcoming meeting, I've got my opinion. What's yours? What do you think we're going to see out of the Fed on the next meeting?
I don't think anything in June. I don't expect any cuts to the Fed fund rate. I would say September's probably likely. And folks that are more versed in this than I am, and pundits that really spend time on what the Fed's going to do, the anticipation there, or the prediction there, is 2 to 3 Fed rate drops by the end of the year.
And they're expecting about a quarter point each, right?
That is correct. So we might see a half a point to 3/4 of a point, which maybe if we go back historically to when the Feds dropped a full 1 percentage point on the last time that they even dropped rates, that only netted us maybe a quarter point in the short term of interest rate relief. So especially
when Dave's saying short term there, the Fed cuts the short term lending rate by 1 point, and in the mortgage interest rates, we only saw a 1/4 point reduction because it's not a 1-to-1. So looking down, Dave, at a half a point to maybe 3/4 a point, we could see sort of max a quarter point move or maybe less by the end of the year, even if all of those predictions came true.
That is correct. Yep. That is exactly
waiting on a massive rate reduction is not happening in 2025 anyway.
No, and the other thing about that is we have no control over that.
Yeah.
And I know we'll kind of go into this, but purchase price, what you're willing to pay for a property. And if you do get, just kind of looking at the math here, a $500,000 purchase price, if that same house were to be $25,000 less, you're looking at about $160 less in payment, which is the equivalent to about a half a point less in interest rate. And, that $160. And, when we're talking, when folks are looking to buy houses and, do I increase my price and ask for a seller credit? A couple grand. Well, I don't want to do that because my property taxes are going to be higher. Don't really get concerned with that on, 2,000-3,000 here or there. But now when we're talking about a $25,000 price reduction, we're looking at, upwards of $26 a month just in property taxes. So you're looking at 160 plus for the $25,000 less in purchase price, plus another 26 plus in property taxes. Now you're, 187 to 190, somewhere in that range. So we're getting closer to $200 a month, which is a couple things. It's, the same house for less, or increasing your purchasing power. Now you could
Yeah.
potentially buy more house if that's what you're wanting to do.
Yeah, and that's a really important point. So if you've been sitting at home, interest rates are hovering around, and we can never quote exact interest rates because it depends on your credit situation, everything else. So don't hold our feet to the fire. Not financial advice, not quoting exact interest rates, but interest rates are hovering around ish 7% right now. If you were saying to yourself, "Hey man, I'd buy a house at 6.5," well, we're expecting to see price reductions by the end of the year. If you watch last week's podcast, Zillow and Redfin saying 1% nationally. But real estate's hyper local. I predict quite a bit more than 1% in loss locally here in California. So what Dave's saying is $25,000 off a $500,000 house. You're talking 5% reduction in purchase price right there is the same as a 0.5% reduction in interest rate. Actually, better than that, right? 0.5% in reduction in interest rate gets you 160, and the 5% or $25,000 price reduction gets you around 190 in savings. So if we see just a 5% reduction in purchase price, that nets you better than a 0.5% drop. So if you're sitting on the fence saying, I'd buy at 6.5%, well, you can also say, I'd buy at $25,000 less, or a 5% reduction in purchase price. And the math, of course, gets better from there. What do we look at about a point, Dave?
Yeah, at a full point in interest rate, you're looking at that's your $340 roughly.
Yeah, 320,
Um,
340 in there.
yeah. And so, but the thing is you don't have control over that, right? And you could potentially get the best of both worlds. And there's never a guarantee that you're going to be in a position or qualify to refinance down the road. But if you were to buy at, say, somewhere in the neighborhood of a 7% rate today, you got the $25,000 discount on the house because the prices are coming down. You save that 180 plus a month. Fast forward a year, if you're in a position to refinance and rates do come down a point, now there's another, 320 plus. I mean, that's $500 cheaper than what you're paying now, and or that what you would had either the rates not come down or values come down. And last I checked,
Yeah.
$500 is pretty significant.
Yeah.
Yeah.
Well, so if you're sitting there and you were saying, hey, rates are hovering around 7, I'd be buying at 6%. If we get 6%, I'd buy. You're looking at probably around $45,000 price reduction to equal about the same. If you get a $50,000 price reduction on a $500,000 home, so a 10% reduction in value. And to put that in perspective, that's not like out of hand. One or two podcasts ago, if you go back and watch, I think it was the last one, maybe two, we went through the local numbers. El Dorado County's lost 10.8% in 12 months. So in the last 12 months, you've gotten that. So if you were looking at buying a house in El Dorado County a year ago and you're buying a house today, it's the same as if you were buying that house 1 year ago at 6%. So if you're looking at that, 10% or $50,000 price reduction, that's going to net you 360 to 380 discount a month, even better than that 1% price reduction. So if you're looking for a 0.5% price reduction, look for about a 5% or a $25,000 price reduction on a $500,000 home. If you were waiting for a 1% reduction in interest rate, well, we're not going to see it, but instead look for a 10% or a $50,000 price reduction on a home. And that's going to net out to that. If you're waiting for 3%, don't buy a house. That's not happening again. And we probably won't see a price reduction that gets you down to the 3% range.
And that price reduction, Rich, that's not just what the house is listed at, right? Maybe if it's listed at, you know, 1% lower than what it would have been listed for 6 months or a year ago, the discount really is what you offer and get accepted on that property. Um,
Yeah, and we're entering into sort of a new phase. So if you were a first-time buyer in the pandemic, we're entering into the kind of market you've never seen before. And if you've got a little bit of gray in your beard and in your hair like Dave and I, then you've seen this before, but it's been a long time. We are not there yet, but we are going to be rapidly approaching a buyer's market. We've been in a really strong seller's market for 5 years straight. We're seeing inventory stack up again. A podcast or two ago, we went through most of the state is up 48 to 70% on inventory. That's going to create downward price pressure. And that inventory stacking up is going to push us into the mechanics of a buyer's market where, regardless of what the market value is at the moment, you can come in and write a lower offer. You can try to negotiate that discount to equal the interest rate savings that you've been looking for. Now, remember, market value is just what a willing seller is willing to accept and a willing buyer is willing to pay, right? So that's it. That's the negotiation there. So even though houses have been selling for higher, the market mechanics are shifting. If you've got a seller that needs to sell for a particular reason, and there's a ton of listings on the market and none of them are moving, you can get with your trusted real estate professional. If it's in our market, I work in the 5 counties, Sacramento, Placer, El Dorado, Nevada, and Amador. Dave writes loans in the entire state of California, entire state of Nevada. Lucky him, he's got a bigger range than me. If you're in there, we'd love the opportunity to help you. And if not, we can help you find someone in your area, or maybe you already have your trusted professional, but get with them and start making a negotiating plan based on the inventory in your market to potentially push the price down to get the interest rate savings you've been looking for, because we don't expect to see it in the interest rates, but we can see it in the prices.
Right. And there's no downside into getting yourself prepared and having a conversation. We don't charge for our time up front. We're happy to have conversations. If you're someone that might have an inkling that you want to buy a house, or just see, do you qualify to buy a house, whether you're going to buy next month, 3 months, 6 months, a year, 2 years down the road, love to work with you. Love to have those conversations and start, getting you in a position to where when timing's right for you, you are in the best possible position to maximize your opportunity.
Yeah, and that's a drum we've been beating on the last few podcasts. And we're going to keep this up, that now may not be the time to buy, but it is the time to get prepared. So for some of you, if you have a reason that you have to buy now because you've relocated or your family's growing or whatever, if you have to, it's not a terrible time to buy, especially if you've got a long time horizon. You might post up some losses by the end of the year, but it'll recover before you need to sell. That's fine. But if you're a marginal buyer on the ragged edge of affordability, a first-time buyer, you've been waiting to get in, maybe right this second isn't the best time to buy when we know prices are coming down, but it is the right time to get with your lender, get with your realtor, get all your ducks in a row so you are prepared to jump in and take advantage of the opportunities when the prices come down. And the point of this podcast is to give you some metrics to think about as you're watching. If all of you have a local realtor who is splattering you with junk mail, I'm sorry that happens. I don't do those mailers. A lot of my colleagues do. All of you have one of them. When you start seeing those flyers coming in, 5% down in your area, 10% down in your area, $25,000 price reduction, $50,000 price reduction, hey, maybe that's my cue to jump in. I've done the numbers. I've talked to Dave. I've talked to Rich. I now am an informed home buyer and know when is the right time for me to jump into the market. But you can't do that if you haven't done the prep work. It doesn't cost you anything to get prepared. So now, if you're asking, is now the right time to buy? Maybe not for you, but now is absolutely the right time to get prepared to buy. And that's what we want you to do.
Yeah. And the other part of that, Rich, is we have a lot of folks that come across that have a house already and they're looking to change, whether they're selling out of the one area and they're relocating to our area, or they're looking to downsize, or they're looking to leave this area and maybe go somewhere different. Maybe we could talk through, they're a seller. They should expect in this market that they have to be reasonable on the price that they're listing their house for, but they may also get some folks that are going to offer them below what their house is listed at. And, so being prepared is getting that house ready to sell, but that doesn't necessarily mean that you have to buy that replacement house right away.
Yeah. And it is really hard to time the market. We don't really ever encourage people to try to time the market. But if your life circumstances allow you to time the market, this is one of those types of markets where that could happen for you. So here's what that would look like. What Dave's talking about is, I'm getting ready to sell. And usually people want to buy first and sell second. We have a whole episode on that. Check out the Informed Homebuyer podcast playlist on my channel. We've got a whole episode on how to do that and ways to do that. Typically they want to buy first, sell second. This is the type of market where it might be smarter to just sell first and take an interim housing option. Yes, you have to move twice. You might have to move into an Airbnb, but if you, Dave and I were talking offline before we started the roll and tape here. See, that's I'm elderly. There's like
Yeah.
all the Gen Z people out
What's
there
tape?
are
Yeah. What's
going,
tape?
okay, boomer. Well, I'm not a boomer. I'm Gen X. But yeah, what's tape? But before we hit record here, we were talking about how if you bought in the last few years in the pandemic, your mortgage is probably so high that renting a really nice Airbnb monthly might be equal or even a discount to your mortgage. So you sell, and so you know what your numbers are, because in a market like this, when you have declining prices, then you buy first and then you go to backfill and sell. You might get less for the property you're selling, and that could throw off all of the metrics on the property you just bought. So you either have to be very conservative with your number planning and say, hey, if I get beat up 50 grand on my house, am I still good on the one I bought? If I get beat up 100 grand, am I still good? We have to pick a conservative threshold that keeps you safe if you're going to do the buy first, sell second move. Or you go ahead and sell first, move into that Airbnb. Probably your monthlies don't go up, but you have all the time in the world to be choosy, to watch the market. If it took you 6 months to buy, well, heck, prices probably marched down in those 6 months. And you got even more of a discount on the property you're purchasing. That's not a bad deal. That's not, might be a
No.
bad deal for the realtor, whoever you're working with, because they didn't get that second sale they were hoping within 30 days, right? But the hell with them. It's not about them. It's about you. That might be a great thing for you in a market like this. So for our sellers, I know it's the Informed Home Buyer podcast, but we have sellers who watch too, because we have sellers that turn into buyers. For our sellers out there, this is a great market to consider interim housing options, whether that be living with family, living in a trailer on family land, or renting that Airbnb. Some places like Folsom still have corporate interim housing because of all the Intel relocations we used to have. If you're in a big city, you'll have that kind of stuff available to you. This is the kind of market where that could really work to your advantage, and you could watch the prices march down a little bit, be really choosy, and get exactly what you want.
Yeah, the other component to that is if you are a seller and you are on the fence, do I sell my house or am I going to keep it and rent it out? Now's the time. We talked about on the previous podcast, we talked about home equity lines of credit. We talked about other things. Get yourself prepared. If you need to take money out to improve your house, maybe that same strategy of, if you're going to want to keep your house, you have a locked in low interest rate, lots of equity, and you just want to keep that house and build your real estate portfolio. You can also do that same process where you rent your house out now and you go do the Airbnb thing until you're ready. There's a couple benefits of that. Is if you are someone that does not have a history of owning rentals, if you rent your house out and you could show that you've rented this house out during the calendar year, and maybe you roll into next year, now you have a history of rental on that property, and you could use the rental income to offset your debt. That gives you more purchasing power, or may help you qualify on the next purchase if you are not in a position to sell, but you want to convert that to a rental and you just want to be more flexible.
Yeah, and that's something Dave and I have talked ourselves out of more commissions than I can count over the years by having someone who we worked with previously call us and say, hey, I'm ready. I want to sell my first home and buy my second home. And we walk them through it and say, no, you really want to keep your first home and buy your second home. Here's how we can help you do that, because that really helps you build long-term wealth. If you're in that position right now where you're considering that move, the advice is the same to the buyers and the first-time buyers we were just saying. Is this second, if I was going to list my home, rent my home and buy a replacement home, would I be doing it in June of 2025? Look, real talk, probably not, folks. And I'm in the business of only making money when I sell you a house. And I'm telling you, I probably wouldn't be doing it in June. But might I be doing it September, October, or November, December? Heck yes, that might be exactly when I would do that. And I need to get my ducks in a row now. And that means talking to the lender, finding out if you can qualify for both mortgages, finding out if you need to rent out a portion of your property to be able to qualify, finding out if you need to take out a HELOC now while your property is not listed for sale to prepare to use that money for down payment for the replacement property. So it goes back to what we've been saying the last few podcasts. Is this the instant everybody should be rushing out to buy a house? Maybe not, but everybody who's thinking about it should be getting prepared so you're ready to jump when the opportunity that you want comes along. This is a market in which it pays to be patient, but being patient and unprepared doesn't help. You have to be prepared and patient. So get on the phone, get these calls going, and make a plan. And this market very well could present a once in a lifetime opportunity for you for home ownership.
Yeah, very well said. And no matter what your circumstance are, conversations early and often are the best part of the preparedness.
And they're free.
Yeah, they're free, and we'll uncover things that you haven't thought of and perhaps you'll mention some stuff that, hey, we haven't thought through, and we want to talk about how we can help and guide you and put you in the best light. And we're talking, we have experience in this. I have rental properties. I've been part of buying and selling properties, taking money out of a house. And how much do you improve that house? If you're going to convert it to a rental, do you not, how long are you going to rent that property out for? Maybe that's a short-term plan. Maybe you see that the market's coming down a little bit, but you don't think you want to sell now, but you have a 2-year plan or a 3-year plan. And, even though we can't give tax advice, how much time, once you convert it to a rental, do you have to either sell it or move back into it and take advantage of the capital gains exemptions? So there's a lot of moving parts there that we can just kind of talk through, and at least encourage you to, if we don't have the answers, to talk to your, trusted professional, whether that's a CPA or whomever that may be, from a tax perspective.
It's a really good point too, Dave, for our higher income earners or higher net worth people watching. If you're thinking about doing that conversion, but you don't want to just talk to me and Dave or the analog and whatever your market is. If you're not in our market, your realtor and your lender, you do want to bring your CPA into the table, because there's totally different tax implications of what you can write off against your rental income, your mortgage interest deduction, all of these things. So if you're a high income earner, high net worth person, converting that first one to a rental, buying a second one could have some positive tax implications for you, could have some negative tax implications for you. We don't know your situation, but there is a third person that needs to be part of the team there when you're making those kind of moves, and that is your CPA. And that's certainly, there are tax benefits of homeownership for all of us, but those get more complex the more you earn and the more investments that you have. So it's always worth having a tax professional involved in the conversation early.
Yeah. And Rich, what generation does that make me if I didn't silence my phone and it rang while you were in the middle of talking?
Yeah. Yeah.
But
The
I've
generation.
seen every age group do that. So typically, if I'm in with my mom or my mother-in-law, and we're at some function, I say, "Hey, turn your phone off. Turn your phone off." And what did I do? Just left my phone on. But anyway,
I'd say you're part of the generation that when they got their first girlfriend, went out and bought the longest phone cord they could so they could get the kitchen phone into their bedroom.
yes,
To
yeah,
talk without the parents
100%.
listening.
Yeah.
That
And you had to
generation.
run back out and push the thing for caller, two-way calling or three-way calling, whatever they called that. So
Yeah, exactly.
yeah.
All right, you guys. Well, that pretty much wraps up our discussion. The main point of this was to let you know that we can't call up the Fed. We can't tell them to lower interest rates. We've all been waiting for lower interest rates. And before, there wasn't price reductions or even negotiating room on the horizon, and now there is. And we are completely in control of that one. As the inventory stacks up, as the market forces shift from seller to buyer, we now are in control of being able to go out and watch the prices come down and negotiate to get the prices to the point where our mortgage payments equal out to what we wanted them to be anyway. And we wanted to provide you some metrics, some benchmarks to use as you're watching this happen, so and can make an informed decision for yourself when the right time to jump off the fence is for you and your family. As always, we're not providing you answers. We're trying to help you make the highest quality real estate decisions you can from the comfort of your couch. We hope this episode has helped. If you made it to the end with us, we really appreciate it. Thanks for watching. Thanks for making it to the end. I'm Rich Curtis.
I'm Dave Miller. Thanks, Rich.
We'll see you on the next one, guys.